Good afternoon, everybody. Welcome to the TraderMerlin Show. It is your Tuesday edition. We're on the 15th of August, halfway through the month. Today, some of you are getting a little bit of pain in the equity index, which I think some of you actually sound like you're happy about that. Good. Anytime you're happy about markets going down means you're smart to know how to short, make money when these things tank. So we'll talk about that a little bit later on. I want to go into the topic du jour. As you guys know, my guest today used to work with me at Online Trade Academy. He hosted Power Trading Radio, or co-hosted Power Trading Radio with me for the better part of a decade. We don't get him on as often as we would like, but when you do get him on, it's always a treat. We're going to talk about an interesting transition for Mr. O'Donnell, which is he's always been a gold bug and still loves gold, but now kind of becoming a Bitcoin maxi. And we thought, an interesting topic today would be the coming shitcoin purge. Now, if you don't know what those are, I've got a couple of them circling around the bowl of this golden toilet on your screen here. Things like Pepe and Floki and Shiba Inu and Hexcoin and countless other shitcoins out there. So without further ado, I will bring on Mr. John O'Donnell to see what exactly his thoughts are on this issue. John, how you doing, my friend?
I'm doing great, Merlin. By the way, I feel honored that you have an image of my bathroom in my home on promoting this show. I didn't realize you were so talented.
That's it. I commend your designer. That's a pretty fancy looking toilet you got there, bud. I don't see the bidet pieces or anything like that, but still looks pretty nice and shiny. Good luck keeping that one clean.
Well, we live in the South, so we can skip on the bidet in the South,
We'll stay in California then. John, you and I have talked about Bitcoin, and we know your thoughts on Bitcoin and how you think that there is some great potential, how it represents a change, a disruption to our current fiat system. It represents real money. And then a couple weeks ago when we had you on, we talked about your thoughts on the coming shitcoin purge, as you like to put it. Talk to me a little bit about kind of what your thoughts of a shitcoin is, and then we'll dive into what the purge is. So walk through kind of why you think that there's this subset of crypto assets that's just trash that needs to disappear.
Well, first of all, we should attempt to define, and I think you're asking the same question: what is a shitcoin? And I think we should start with and you've done a lot more research on this asset category than me. Matter of fact, you introduced me to the asset category. And you're right, I'm a Bitcoin maximalist, so I'm coming at it with my own bias, but that's because of my risk management philosophy at this stage of my career and life in managing my own resources. But let me ask you a question first, and then we'll get into trying to define what a shitcoin is, because I think our audience understands there's somewhere between 24 and 25,000 coins. Let me ask you, how many have already gone away? How many don't even exist anymore? Would you guess there's another 10,000 coins that have already been flushed out of the system?
I love the term. Keeping with our toilet design over there. So first off, when you quote that 24,000, that's 24,000 different cryptos that are on exchanges, which means, those are ones that have gone through a process of building a liquidity pool and actually having trading volume. So for example, I presently have 5 coins that I have created, 4 of which will never see the light of day. They were just testing and playing around. One of which I actually created a liquidity pool. So I went over to PancakeSwap and I deposited some USD stablecoin or USDC, and I have also my TraderMerlin token in there. So now I have liquidity. So technically, that may register on an exchange as having liquidity. That said, there's over 1.8 million different crypto projects which have been created, or tokens which have been created, most of which are probably just people testing the system out. But I think it speaks to how easy it is to create this and why it's so important for us to do our research on all the projects, because there's not 1.8 million stocks combined in all the exchanges around the world, right? Yet we have over 1.8 million just in crypto. So that's kind of scary. As far as your question of which ones have failed, I don't know. I still think that the ones that should have failed and should be gone the way of the dodo, they're still there because people still try to pump and dump those through user groups, through Reddit, through Wall Street Bets, and I think that there'll always be that gambler mentality for those ones. So I don't know offhand how many have disappeared altogether, but even ones like Shiba Inu, like Floki that I have in the graphic over here, or Pepe Coin, those in my mind are shit coins. They really serve no purpose whatsoever. There's no real intrinsic value to them. And what good do they do? Those should be at zero. But, I'll bring up a graphic here for everybody. Let's bring up some of the ones I just mentioned. Let's go to what I have on there. I had a Shiba Inu, right? So here's Shiba. All right, there. It's been on a huge run since last June. It was down, I can't even count how many zeros, but it was like, 6 zeros and a 5. It's up 100% since June 11th. But grand scheme of things, look at it. I mean, this is a company I'd say stay away from. If it was a company. It's not a company. It's a joke. This is a scam coin, I think you should call it. This one should just go away. Should just disappear. You have Dogecoin, which still has like a $10 billion market cap. Blows my mind with a similar picture. Right, just flatline and going to hopefully be going to zero here. There's some weird graphics on TradingView from now, but I don't know, John. I don't know which ones have gone away. I don't think any have legitimately disappeared 100%. They're still on the books. They're still potentially tradable, and I think that there's going to have to be steps taken to ultimately force these ones out of the marketplace.
Well, either the exchanges are going to have to become a lot more rigorous in allowing them even to be traded.
Right.
You have to ask, what are they thinking? And number two, or no, 1A and 1B, it was the SEC. There's going to have to be some definition, some I don't know, some benchmark you have to get to. But I
have to laugh, John. I have to laugh. Hold on a second. You just said there has to be some definition. There have to be some benchmark. And as you've known and seen, when Gary Gensler is on Capitol Hill in front of our elected officials, grilled on what is Ethereum, this bald-headed idiot can't come up with a definition. He cannot say that this is a security or this is not. So do you really expect there to be any clear definition at any point in the future or near future if he can't do it on simple things that are really clear and easy to understand, like Ethereum?
Well, if he can't do it, perhaps the courts will have to do it for him. I certainly don't have a lot of confidence in the Congress. They're just as bad, if not worse. But the bottom line is, this takes me back you're right. I was an early gold bug, and I have to tell a story. When I first got into gold, you couldn't own gold. It was illegal. Now you could own numismatic coins. And the only thing you could really, if you wanted gold exposure, there were a bunch of penny stocks that were in the gold exploration business. And some of them sold on the Spokane Mining Exchange, believe it or not. And there was a liquid market in these little mining companies that would go out and explore for ore bodies in anticipation of finding something and then selling the development rights to a mining company in a stock exchange or for cash. And it was a very lucrative little business of geologists going out and finding ore bodies. So I met with a stockbroker who gave me the following suggestion. I said, which one of these things do you buy? There must have been about 50 of them that you could choose from. And he said, pick 10. And he said, just pick 10 and put $500 each in the 10. And he said, I don't know which one's going to work. Nobody really knows for sure. They'll probably go bankrupt, but you'll have a risk portfolio. You'll have some exposure. And he was right. When the dust finally settled, 9 out of the 10 went out of business completely. And the way you go out of business is kind of like bankruptcy. It's kind of slow, and then it's all at once.
Right.
And I think that's what's going to happen in the shitcoin category. It's going to be like gold mining share bankruptcy model. At first, it'll be kind of slow, and then it'll be all at once. And that's how bankruptcies. And you and I have seen some companies become insolvent with that pattern. That being that being said, the one company that I did buy uh, became worth 10x. Okay, and that took care of me. The other nine went bankrupt,
Mm-hmm.
but I bought the stock. The one that survived, I bought it for like 10 cents, and it went to $3.25. And it took care of all my cats and dogs, made me a profit. And but I went into that with 100% risk capital in anticipation that I was going to lose all of it. I was just, as they say in the UK, I was taking a punt. So I think that's in the shitcoin category. I'm not going to participate in it. I understand you have a small position in it, but you take it in a very uh, uh, research approach. You go in and study each of the projects
Of course.
with discipline and rigor, and you've identified a handful of them. I would guess it's what, less than 10 that you have exposure to.
30 to 39.
Oh, okay, then I'm wrong on that. And but you're expecting most of those won't make it either.
Yeah,
I
so
would guess.
two things with your, if you're a publicly traded company and you cease to make a profit and, people you fall out of favor, you'll ultimately just become delisted, you go into bankruptcy because you have physical buildings and assets and all these different resources. It's a bit different when you look at digital assets. So for example, Big Eb asked about, is the FTT token still around? How about the FTX collapse? Yes, they are still there. And no matter what, they don't just disappear unless they get sent to a burn address. They will always be there because, remember, FTT tokens are hosted on the Ethereum blockchain. So unless Ethereum disappears altogether, the FTT tokens will exist in perpetuity, just not have any value because no one really wants it. And for Big Eb, here's your chart right here. This is FTX token on Binance. And you can see its peaks back here was up around $85. And now we're down around $1.08, drifting, lower today to the tune of about 6%. So they're still there. So I don't see the bankruptcy, the disappearing of a token altogether. I just think it's a different structure, different dynamic. What is unique to it is that at any moment they can rise up. Now, the regulators, I think, are the ones that are going to have the big task of going through here and saying, do these tokens like Shiba Inu, right? So I guess to your initial question earlier, John, what is which type of token and what's a real shitcoin, et cetera. So I've explained this to my viewers. I think that there might be some new people here today. If you are new, hit that subscribe button. But I created this just simple coin types, right? And I'm going to correct John a little bit because I personally do not believe that John is a Bitcoin maxi. A Bitcoin maxi, which is what you hear in the industry, is someone who says Bitcoin is the only one. Everything else is garbage. It's absolute scams. There is not one shred of value in any of those other 1.799 million tokens or coins out there, right? That's what a Bitcoin maxi is. It is Bitcoin and nothing else. I don't believe that you are that, John. I believe that you're saying the vast majority of these other 24,000 that are on exchanges are probably garbage, but there might be a handful, 10, 20, that actually could be disruptive technologies in the future. There is going to be some value there. Aside from Bitcoin's store of value and use as money, Bitcoin's not programmable. So you have Ethereum, you have Litecoin, you have, not Litecoin, Algorand, Avalanche, Cosmos. You have programmable blockchains, which open up a whole new door of business. And I think you would agree that there probably are some pretty big upside potential projects in that space. Would you agree?
Yeah, I would agree. There's a handful of them. I mean, it's kind of like internet equities, isn't it?
Yep.
In the 2097 to 2001 era.
Yep.
I mean, you had to pick, you had to pick the needle in the haystack there as well. I mean, I remember Amazon at I think $3 a share.
That was that was in 2001. It IPO'd at $18 in 1997. Luckily, fortunately for Amazon, they got $600 million of funding in 2001. In 2000. Otherwise, Amazon wouldn't be here today. It's that funding that kept them alive. But yeah, they dropped down to like $3. Pretty crazy.
I remember at one time they had I looked at their balance sheet. It was a really cheap stock. They were just past selling books and a little bit about music, and all of a sudden, they got $2 billion of zero coupon bonds on their balance sheet coming due. And I'm thinking, I mean, why didn't I go in there and buy $1,000 worth of that stock?
Shoulda, coulda, woulda, John. We can't do that. Don't do that to yourself. And this is why I built the crypto course, right? It's specifically for this. I did it for myself. Everything that I teach in crypto today is all my own research for myself. It's totally self-interested. As we just, Ayal was like, hey, let's make a class out of this. And I said, okay, fine. I don't want to make that same mistake that I did back in the dot-com bubble, which is I was privy to all of those companies. Every one of them that was there, I was trading them on a daily basis. But if I was smart enough, I would have looked forward 10 years, saw the change, and said, you know what, I'm going to build a portfolio, hold a few. And for those who might be new here today, I am giving a presentation tomorrow on Thursday at 4 p.m. Pacific time. I'll post that into chat here. Or can I post it in chat? Oh, yeah, I was going to do a poll for you, but here's the link to the webinar on Thursday. That will be for anybody who wants to join, not just for OTA people. So anybody who wants to join, click that link, sign up, share it with your friends. But I do a good analogy as to why the dot-com bubble is very similar to what we're experiencing today. But I agree with you, John. At least I think there's going to be some that may be huge disruptors and may be the new Amazon or Google or eBay in 10, 15 years. And I want to be holding those in my portfolio.
Yeah. How do you stay abreast, other than doing constant research on your top 10 picks? Let's assume of the 39 that you have, you must have them rated or scored in some way as to those you like better than others. How do you stay in touch with and keep your finger on the pulse, your top 10 targets?
It's interesting. So it's not that I've necessarily graded them and said, hey, here's 1, 2, 3, 4. The way that you can tell on my grading system is where the money is at. Like which one has the largest amount of capital invested for me, because I'm going to continue to invest in the one I think is going to be the lead dog. And I do continue to add to positions. Right now, Bitcoin's my number 1, Ethereum is my number 2, and there's jockeying for position in the 3, 4, and 5. But for me, I know those technologies, and I'm part of those communities, right? I follow them on social media. I'm making sure I know the development groups, and I look to see when the upgrades are coming, how those have gone, what's the roadmap look like, and some that I was very high on that I thought really represented huge disruptive technologies have fizzled out because their roadmap, they just stopped development. Things like Polkadot. I was real big on Polkadot, which still could do something, but right now I feel like it's just laying on the sidewalk and I'm poking it with a stick saying, do something, move, right?
How do you assess the risk of these that you have in your top 10 list? Of being delisted from the exchanges from pressure from SEC?
Well, there's obviously the immediate Howey test and running through the variables that make up that Howey test, which of course was constructed in the 1950s and is not really applicable to digital assets like we have today. That needs to be updated. But typically, I'm looking for the ones that are the most decentralized. So the more centralized a project is, the greater the red flag it's going to be for the SEC, which is one of the main reasons they went after Ripple, right? They sold unregistered securities, and Ripple is fairly centralized. There's like 8 big entities that run all the nodes for that network. Now, you can be a node operator for Ripple, but there's no reward. There's no payment for you to do that. So why would you do it, right? So it's not decentralized at all, whereas Ethereum, extremely decentralized and working on new technologies to make it even more decentralized. So I think for me, number 1 would be how decentralized is that network? Number 2, is there one controlling entity that's trying to run everything? That's another red flag because then it makes it more of a business. So those are kind of just at least on a high level, 2 things I'm looking for when I'm looking at investing in any crypto project. Because the regulatory issues are going to be there, John. You know that.
Yeah, of course. The question I have is, let's take Coinbase as an example. Coinbase is really out there. I appreciate, and by the way, I hope they win their lawsuit, don't get me wrong, but they're really sticking their head out there trading as many coins as they are trading, because some of those are going to get the axe and be declared securities and not registered, and the bid's going to disappear on some of those. And I think Coinbase has contingent liability because the courts are going to have to rule on this. Something's going to have to define what a security is outside of Gary Gensler.
Well, it looks to me like Gary Gensler may actually lose his seat and be booted out of it. It just feels like that's the way it's going. I'm hearing more and more, negativity. And, right, at least at this point, Coinbase is safe. Even if those get delisted, right? Should there be more litigation against Coinbase? Probably not, because you haven't defined what is a legal coin or not. Now, remember, the SEC is the one that actually said, hey, Coinbase, you've passed all of our hurdles to be a publicly traded business in the United States. Therefore, there should have been some scrutiny on the part of the SEC. So part of the fault could be pointing at the SEC here. It's all of a sudden, hey, you can now be a business, but we don't like what you do. Well, you should have thought of that early on. I guess just the lack of clarity from the SEC is a blessing for Coinbase and Kraken and Binance and Gemini. If the SEC comes up and says, okay, here is the official clear definition that everybody can understand about what is a security and what is not, then on that date, Coinbase can orderly say, all right, well, we're going to remove these ones from our U.S. market exchanges. We'll keep it on our international exchanges for sure. But just to comply, I think that they'll skirt any real legal activity there. This whole selling unregistered securities, I don't think will stick, because you haven't proven that these are unregistered securities. You haven't defined what a security is. So that I think will save Coinbase, and I am bullish on Coinbase long term.
Well, I certainly hope they make it.
Yeah, me too. Let me continue on, John, because I actually drew up this graphic just right before the show, because you'd asked me about it. So we have the coin is Bitcoin, and just so we can get clarity on our topic for today, a altcoin is anything else. So shitcoins are altcoins, meme coins are altcoins, right? It's just everything else other than Bitcoin is an altcoin. Then you get into meme coins. These are literally a joke. There is no fundamental purpose. You can't really buy anything with them. They're designed just to be a pump and dump greater fool theory. If you buy anything that you know is a meme coin, you are holding something that over the course of time will inevitably go to zero. So great for trading short term, kind of like a triple leverage ETF, right? They're great for short term trading, but not for long term holding. And then you have the shitcoin, which serves no purpose. There really is no intrinsic value to it. Now, you could make the argument that things like Dogecoin and Shiba Inu are accepted at some locations, but there is no real development community going on. There's nobody really building or improving on the code. There's no roadmap for where it's going to go. Someone literally created a token or a coin, said it's going to do all these things, and most of them don't do anything at all. They just fizzled out and did nothing and tried to grab a bunch of money. So in my mind, shitcoins would be something like Hex token, which actually has a community, but it is a Ponzi scheme. You have things like Shiba Inu and Dogecoin and Floki Inu, or anything, guys, that has the word Doge, Floki, or Shibu in it in any way, shape, or form is a shitcoin. It doesn't serve any purpose and should just be left alone and moved on. Margaret says a little due diligence would have been a great idea for these brokers. Yeah, they do have requirements. They do go through a vetting process, and a lot of them say very proudly that they've gone through just to make sure that there's liquidity and a community behind it. But you're right, Margaret. I think that they've been a little lax with some of the things they've added. So anyway, John, those are your four kind of major classifications that I would break it down. You've got the coin, Bitcoin, altcoins, and anything else. Meme coins are just meant to be a joke, and shitcoins are ones that lead you to believe there's something good behind it, but they really have no intrinsic value, then they serve no purpose. So there we go. Got my definition out of the way.
Well, this gets down to building a portfolio and risk management. Everybody, I think you agree that everybody needs to have a position in crypto, but it needs to be adjusted to their personal risk management strategy. Is that right?
I would say yes to that one. And to say that everybody should own crypto, I don't know if that necessarily is true. I think there's some people that may, in their current financial situation, maybe shouldn't. Like, let's get your debt cleared up before you start buying any crypto. But once you have investable assets, I think you should have a piece of your portfolio in crypto. I mean, look at these poor people down in Argentina. What is 118% inflation on their currency? It's basically just wiping their currency to nothing. Like, if I lived in Argentina, every day I got paid, that exact second I would be buying Bitcoin with my paycheck every single day.
I found a chart on the Argentino peso. I don't know if you can pull up a chart on the Argentino peso, but the price of Bitcoin is like 200 million pesos per Bitcoin. I mean, some ridiculous number like that. And it just shows you this tremendous decayed central banking fiat system we have across the world. And there's so many countries
Yeah,
uh, that
I have the chart up right now, John, and this is just this. This is so. I feel horrible for anybody who lives in Argentina, but you think you got issues in the United States. You can go back into, let's see, what year am I in here? It's there in 2013. This was up at 20, right? So you had 20 Argentinian pesos to the dollar. Actually, an Argentinian peso would be worth 20 cents. So what, 5 to the dollar. Now it's 0.0024. Yeah, you're basically worth nothing. Your currency is just plummeting. And again, this is if you're getting paid there. The last couple of years, I would challenge anybody here who ever find a chart with this much of a predictable, unbelievable downtrend in the valuation of whatever it is. This is it's literally gone down, I think, every single week for the better part of the last 3 years. So yeah, this is why you need to get away from the fiat system. It's a way to get away from manipulation and printing of money and just bad economy. Unfortunately for the poor Argentinian citizens, they're getting absolutely screwed with their currency down there. It's a brutal chart.
well, it's happening all over Africa. It's happening all over many underdeveloped countries. And you're right. It's an absolute tragedy. It's like the Weimar Republic repeated again. That
Mm-hmm.
and on and on and on. Well, maybe we can fix it with Bitcoin.
Well, I mean, and that's up to I would say it's up to different cultures and different societies to make that happen. Let me ask you this. Before we move away from this topic of the Bitcoin purge, I want to get a little bit of clarity from you on when you say the coming shitcoin purge. I agree with you that the vast majority of crypto projects are shitcoins. They're trash. They need to go away. But what does that look like to you? How do you see this change coming? And you could put whatever time frame you want on it. Obviously, not going to happen next week. But let's say a couple years down the road, what does it look like so that we don't see these names anymore, like Floki or Doge or Shibu or Pepe Coin or Hex?
Well, I'm a believer and an advocate of free markets, and I believe ultimately the market intelligence. Mises or Hayek would say, let the shitcoins have their day in the sun. The market will ultimately sort through the fact from fiction, and they will disappear. They will go away. I mean, they'll just be the bid will just when something goes from $85 to 50 cents. In essence, there's no real bid for it. I mean,
Right.
if you really think about it, you've lost 99.9% of your capital, and ultimately, or it will be a regulatory event. But the free market has probably more power already. I mean, how long did it take to source out, all the shit coins we've seen so far? They're just all of a sudden you wake up one morning and there's no bid.
Right. Yeah. What was that one? There was one called the Squid Coin or Squid Game Coin. After that, show got so much popularity. That was an awesome one. It had like a 99% drop in one day because liquidity was not there. It's not on any major exchanges. So, yeah.
We'll pull up, pull up the chart on that FTT token.
Sure.
Look, how long did it take to lose 99% of your capital?
A little bit longer than you would think.
Yeah, you're right. It had a little bit of, but remember there was some.
It lost 97% of its value, 95% of its value in 2 weeks. So at least it took 2 weeks.
And that was priced by the market. The market did that work. It wasn't
right.
SEC.
Correct.
So I believe in markets, and there was a story about how do companies go bankrupt. And although there may not be a bankruptcy Chapter 11 proceeding on a one-to-one pari passu basis, but at the end of the day, companies have the same profile. They go broke slowly, and then all of a sudden it's all at once. You wake up and it's a done deal.
Yeah.
99% of any capital or reserve that was there is dissipated. Well, the market repriced it. Market makers are pretty damn efficient because They have short selling. As long as there's short selling capability, price will be the ultimate rule of who's ultimately going to survive.
Yeah. Well, I think it's a combination of many things, and as Margaret puts in here, she says regulation is necessary up to a point. Yeah, right away, I think what has to happen in order to make this industry much more acceptable, certainly to our elected officials, but also just banks, brokerages, institutions as a whole, is we have to weed out these shit coins. And there needs to be some regulation that says in order to list a coin or a token on an exchange, you have to meet 1, 2, 3, 4 different thresholds. And once you meet those, you can be listed. And that would keep away coins like Hex. That would keep away coins like Pepe, which I've taken my viewers out to their website, which literally says, there is no purpose to this. There's no value to this. It's a joke. Do not invest in this. It says on their website, yet has a multi-million-dollar market cap. It's just insane. So we need to have that regulation stuff in there. But the other side of me, which I think you would be more on this side, would be caveat emptor. Let the investor make their own decision. I would argue that most investors don't know what they're dealing with crypto. That's why they need education.
Well, can you imagine, when the business plan came out, when Jeff Bezos started Amazon? I mean,
well, he met financial requirements. He met financial requirements. Otherwise, he wouldn't have been able to do an IPO.
And he was borderline bankrupt several times.
Yep.
Bill Gates, when he first started, they started working out of a motel in New Mexico. They didn't even have an operating system. They went out and licensed somebody else's operating system and sold the pig in a puff to IBM, and the rest is history. I mean, he was borderline bankrupt multiple times. So, but I believe in free markets, and I believe an entrepreneur ought to have a shot. But when you have larceny in your heart and you're just going to go out there and create these shit coins to steal other people's money, I got a problem. I got a jail cell for that.
Right.
I mean,
and to go to your example, and I agree with you on this. I think it's funny that you look back at those examples you mentioned with Bezos and Bill Gates with Microsoft. It's like they could have argued at any moment in time. Look, I have a development team. I've got office spaces and businesses, hundreds of employees, and here's my prototype of the computer that I'm building, or here's my website model that I'm trying to build for Amazon, and here's what we're doing. So we're not creating pipe dreams and bullshit along the way, whereas someone can go to Pepe Coin and go, what are you doing? What is this? And they go, well, we're a joke. We really don't even know what we're doing. We're just trying to grab money. That needs to be shut down, right? That's the easy part. And if you can justify, let's say something like Ethereum has tons of ground to stand on to say, we are trying to build the world's largest decentralized computer that no one person can control. That's a tangible project. There's thousands of developers around the world working on Ethereum. Same thing with Avalanche and Solana. But these shitcoins, that's why I love when you said, let's talk about the coming shitcoin purges. I think everyone needs to be aware of what you are buying. If you're buying anything in society that serves absolutely no purpose, then you should probably not buy it. And I watched a video today of this guy. He said it was a stupid video he created where he's trying to sell these they look like little dots on his fingers, and they were little wool pads. And he's like, you don't need oven mitts. You could just have the oven tips, and these little wool things will insulate your hand, and this is all you need. Just buy it today. And he reaches in, he burns the crap out of his hands. He starts cursing on camera and everything. It's like, I don't need those. I need an oven mitt, right? $2, Walmart, got an oven mitt that serves that purpose. So that guy's company failed because you're garbage. Investors have to understand what it is they're buying. And the session I'm going to be doing a little bit on Thursday is kind of about that, evaluating your positions. What is it that you're looking for, and what are the questions that you need to ask yourself and of the project you're looking to invest in, so that you don't get scammed. And even if you do, you could still get scammed along the way, because you just never know what happens. But at least you've increased the probability of success by weeding out the bullshit.
One of the things I'd like to ask you about, Merlin, you have a new article out about, will the digital asset economy supersede the internet?
Yeah.
And I think it's on bar charts.
Yep.
And I enjoyed reading that.
Thank you.
I would encourage your listeners to read it. You might want to put a link to it. But give me your short answer. Why did you write that? And I think you're very bullish that will happen, that this digital asset is it's like another industrial revolution that we're going to be going through. It's going to be that so many of these projects will succeed and absolutely change uh, the paradigm. Is that your position officially?
Yeah, my position is that we will always be innovating as a society, not just the US, but as a global society. We're always going to be innovating and using technologies to make our lives faster, more efficient. And you look at physical money, it's slow, it's cumbersome, whether that's the production of it, the manufacturing, distribution of it, the cleanliness of it is awful. It's, I don't know, it's clunky. It's an old system we've been using forever, and we have not had an upgrade to our monetary system to go pure digital. And if you look at the way that music has been sent around and things like, well, you can just, music, books, it's all digital now. So I don't need physical printing presses anymore. I just publish directly on Amazon in an ebook. I don't need to buy a Walkman or cassette player anymore. I just stream my music through Spotify or YouTube. Money has not done that yet. And I think that as soon as we do that, the doorway to everything being a digital asset will start to open up. I'm talking your title to your car, all digital. You got that pink slip, you won't need it. Your car will be a token. So when you go to sell your vehicle, you'll just sell that token, or you could sell it portions of that token and sell part ownership of your car. Your home, music instruments, anything that could have value could now have tokens associated with that. And to me, that brings in speed, efficiency, transparency, accountability, something that the financial system has been lacking for some time. So I think as soon as we get that USDC or CBDC in place, you're going to go to a digital world very, very, very quickly. And I'm hoping that I'm holding those positions in my portfolio. I think it's inevitability. I don't think it's a probability. I think it's an inevitability. It's just a question of when.
Well, it's estimated there's over $900 trillion of financial assets out there in the hands of investors and pensions and governments. And X percent of that, I mean, if you look at the 900 trillion as the total addressable market for a digital asset conversion, I don't call it just a digital currency conversion, but it could be everything.
Right.
It could be artwork. I mean, it could be bond market is probably the biggest category to convert over. I mean, if you take a small percentage of each of multiple categories that you listed, my goodness, I mean, you can come to ultimate $1 million to $10 million price on Bitcoin.
If Bitcoin becomes that backbone for it all, correct. And I think we'll have different choices and alternatives out there in the future.
And by the way, I hope we do. I hope it's not one. I hope it's multiple digital assets.
Right.
So we'll have choice.
It's funny. Lisa says, "Hold on, I'm in the printing business. Don't wish printing presses to go away." I'm not. I am absolutely not wishing that they go away. Just, let's be honest, Lisa, think back, I don't know how long you've been in the printing business, but if you look back over the last 20 years, how much has the digitization of books and books that will never even go to print now, how has that maybe impacted your business? Now, that's assuming that you were doing printing like that. We'll always have the need to make quick copies of documents and things like that for ourselves. So that type of the printing business will probably be okay. But I'm pretty sure that if you're a commercial printer, that you've seen a dramatic impact to your business because everyone just direct publishing, saving all the printing costs. So instead of selling the book for $20 because it cost me whatever $13 to make it, I can now just go to Amazon and a click of a button, I can create 1,000 copies. It's the same price. So yeah, I don't wish that it goes away, and there will always be a place in the heart of all of us for artisanal crafts, and maybe printing becomes one of those, or candle making, and things like that. You'll still support those industries, but overall, big corporations are going to try to do away with anything that's going to cost them overhead. And money is something that costs them overhead. The transfer, move, store, all that stuff. PayPal now introducing their own stablecoin. That's very interesting because it's a legit big business saying, hey, we're in the money business. We're just going to create a stablecoin that we can use as a transactional medium. Waiting to see what kind of pushback we get from regulators there. But we are, whether you fight it or not, I'm pretty sure that everyone would agree that innovation is going to change the financial landscape that we live in one way or another, and we're witnessing it today. 2 years ago, or actually 10 years ago, you need to send someone money, you wrote a check. 5 years ago, you sent it out maybe with Venmo or PayPal. Now, you can do it with FedNow. In a couple years, you'll be able to use probably multiple wallets, and you would be the custodian of all of your money because it's in your possession, no longer in a bank. And those types of things are going to happen. I'm excited for it. And if I'm totally wrong, then I will lose some of my money in my portfolio. The good news is my portfolio is constructed in a way that I'm attacking many different market segments, and hopefully some of those will rise to prominence and make me a bunch of money along the way.
Disruption is very, very powerful, and most of us in life are afraid of change. Since I've got involved with Online Trading Academy, my resistance to change has reduced dramatically. But one of the biggest industries that is ripe for disruption is your classic bank.
Mm-hmm.
Your charter bank in your community, or a JP Morgan. I mean, the whole banking industry, whether you're a major bank or a little community bank, I mean, it's ripe for serious disruption. It'll be interesting to see how it handles the coming digitization, and consumer direct peer-to-peer settlement is going to be quite a thing to watch.
Yeah, the peer-to-peer network, I think, will change a lot of stuff. I mean, I think a lot of us would be interested in having an environment where if I want to send money to Lisa here, I could just send it direct. Why do I need to have a bank? Why does she need to have a bank? But Big Ed puts in your Western Union. Yeah, I think Western Union is dead. I think Western Union is going to go the way of the dodo here. I mean, if you look at what Strike is doing, if you look at what Stellar Lumens is doing, even what Ripple is now pushing harder to do, you're going to do away with that Western Union business. And, you mentioned some of these big banks. I'm going to bring up, I just pulled this up. This is Chase Bank's website right now. Okay. And where did it go? It just disappeared on me. Where did it go? Well, it literally just had the rate up when I zoomed out to a certain extent. That was really, let's go 92626. There you go. That is so weird. You guys see it? It was on the screen and then it disappears. As soon as I try to zoom in, it tries to disappear on me. But here's the all balances. All balances, 0.01%. And you got to ask yourself, how stupid does JP Morgan Chase think that we are? And the real sad part here is we're pretty stupid, because you look at how many thousands, if not millions, of accounts that JP Morgan Chase has. They're paying you 0.01% interest. And with a little bit of business smarts, you'd move your money away to an Ally or Synchrony Financial, some other bank that's going to give you, not Synchrony Financial, SoFi. There you go. That's what I was looking for. That's going to give you 3, 4, 5%. It's like this model preys off the uneducated people in the world, and clearly there's a ton of them.
Yeah.
What else were we going to talk about, John? We would talk about the shitcoin purge. We talked about these coins going away. Are there any any other than Bitcoin that you like, that you think maybe not be a part of this purge and may actually make it?
Let me put it to you this way. At this stage, I haven't pulled the trigger. It's all about human action. It's not what I like. It's, do I vote with my feet or do I vote with my capital? I am taking a look at Litecoin.
Okay.
But and of course Ethereum. But I haven't taken action. And to be honest about it, I don't know if I will. But I may stick my toe in the water a little bit. The more I listen to you, the more I feel comfortable.
Yeah, I think Ethereum I'm with Big Ab. I think Ethereum is one you should have a little bit of, just a small portion of it. It is the juggernaut right now, and if Ethereum can pull off the next 2 upgrades like they're planning on doing, and they've been very good about sticking to their roadmap, you could see not only Ethereum get even bigger, but push out a lot of this competition that's in their space right now. Things like Avalanche and Cardano may face a big uphill battle if Ethereum can get scalability.
Yeah. And that's the fear. But that's why we have stop losses too, right?
That's
why We take a position. We don't take a position without a stop loss.
In theory, a lot of people take positions without stop losses and get smoked. Let's see. Margaret says, "Do either of you have a daily trading requirement for crypto investing?"
Daily requirement?
Yeah, daily trading requirement for crypto investing.
No, as I no.
I assume you're a dollar cost average kind of guy. You just keep
finger
adding.
on the pulse of the price. I'm watching the charts, but I'm whatever I have surplus capital, I add to my position.
Yeah.
And I don't know, but I don't. I mean, I don't. Should I dollar cost average? Looking hindsight being, 2020. I wished I would have started dollar cost averaging back in 2017.
Yeah, I did. I've been still averaging in. I know long term I'll be okay. Margaret says like minimum volume. Here's the problem with that, Margaret, is you can't find reliable volume statistics because remember in the crypto world every exchange is its own separate pool of liquidity. So if you're trading something that's highly illiquid, you need to look at the liquidity first. And when you make a transaction in crypto, especially if you're using like MetaMask or swap platforms, what happens is you can see your impact because when you make a trade on a swap site like Uniswap, SushiSwap, PancakeSwap, you're accessing a liquidity pool, which is exactly what you think it is. It's a pool of liquidity. So all of the tokens they have available for that specific crypto you're looking for are in that pool. So if someone sells too much of one, it could have a massive impact on price in that liquidity pool. And it will tell you what that slippage is. So yeah, liquidity is an interesting one, but typically I'm not trading that big. I'm not going out like in when I'm day trading equities, I'll go out and I'll put on a trade that's $200,000, $300,000, $400,000 from a day trade perspective because I need a big block of shares to move a little bit and you make money that way with the day trading model. With crypto, I'm more in the investment side. I'm more like just build, add to positions. I'll dollar cost average Bitcoin. I haven't bought any recently. The most recent addition I made was probably a few months back with Solana and Storage, which is a storage token project. But I don't have those same kind of requirements because the markets are structured fundamentally different than you would look at something like equities. Well, John, any closing arguments here? Any closing comments for you before we wrap up?
No, I'm glad we had our opportunity to, flush that topic thoroughly, and I look forward to more conversation down the road. But and I wish you the best. I know you've got some shitcoin positions, and I wish you the best on them because they're pure speculations. And as long as you know they're pure speculations, I know you won't get hurt.
Well, let's be. I'm gonna say I have altcoins. I do not own shitcoins. I don't own ones that serve no purpose, right? So I'm not gonna be holding Floki or Doge or Shiba or anything like that because there is no purpose behind them. So technically, I would argue I don't own any shitcoins. The only time I've ever held them was on trades like when Elon Musk went on Saturday Night Live. I bought a bunch of Dogecoin knowing it was going to rally up because he was going to pump it and have fun with it. Sold that right before he went on live on Saturday Night Live. Made a killing. I have no interest in holding those. So all the ones that I'm in are altcoins that I have done the analysis, like Storage, just one of our that we analyzed as a class at OTA a couple weeks back. I bought a little bit of Storage and just a small portion because I like the idea. I research it. I know the tokenomics. I know what they're trying to do. I see the benefit of that project. Therefore, I don't call that a shitcoin. To me, that's an altcoin that has potential, but you're right. They could fail and at some point be a shitcoin if the developers leave that project. But I appreciate the encouragement. I'm hoping that in 10 years or so, I can look back at this and be like, man, I absolutely nailed it in my portfolio. I'm sure some will work and some won't, but that's just the beauty of not knowing what the future holds.
Yeah, we'll go on a vacation together in your favorite part of the world.
Perfect. Any part of the world is my favorite. I love traveling. So unfortunately, John, I didn't win the lottery.
I do have one last question I'd like to feel you out on.
Sure.
The SEC has taken a pretty strong position that staking in and of itself is a security. They've taken that position with Coinbase and Binance. How do you feel about the attack on staking, just isolate the concept of staking, and I understand there's a couple of different ways to do that, as a security?
That's a tough one. I would argue that staking, in one sense, is very akin to collecting dividends, right? You're buying a stock with the expectation of collecting a dividends. And many people don't even care what happens to the stock because they're going to hold it for a long time just to collect those dividend streams. Now with crypto, depending on which project you're in, I'll use Polkadot, for example. I'll earn about 14.6% on my Polkadot per year. I'm not really concerned about what the price of Polkadot does. I'm looking to continue to earn Polkadot as reward. So I look at it almost as the same as a dividend stream or dividend payments. Therefore, I think that would, in my mind, lean these more towards securities if you're proof of stake. It's a clouded thing because, again, when you put the Howey test to crypto, the Howey test was created when none of this was even an idea. Right, the decentralized marketplaces were never an idea when Howey was constructed. The tokenization of assets, that was not even a pipe dream back then. So the rules need to upgrade, right? We need to literally execute and get away with and murder the Howey test and redo some test that's more modern. And it's kind of like saying, I'm buying a car today. I'm going to go down to the dealer and the guy's trying to sell me on a cigarette lighter in my dashboard. It's like, hey, clown, that hasn't been a thing for 20 years, right? It doesn't work anymore. Why are you selling it to me? Why are we using the Howey test on markets today when they just it don't work? I think, unfortunately, like I mentioned earlier, our financial system has not updated itself. They have not improved themselves. They've not kept with the times. And maybe we'll see that. We'll see that start to catch up. I'm hoping that we get a younger generation in office in 2024. Somebody who's younger, more up to speed and says, listen, these rules that you guys put in place 30, 40, 50, 60 years ago, it ain't going to happen. We need new things in place because we're a digital world now. Let's upgrade our system. And when that happens, we should get some clarity. But to answer your question long-windedly, I do think that staking, because you are investing or putting your tokens in with the expectation of a profit, it actually does qualify for one of the Howey test pieces and therefore maybe more of a security than not.
Well, that's going to be a very serious hurdle for the business model of Coinbase.
Yeah. Well, they're not doing a lot of money with staking. I mean, they have a few things that they stake, but not much. You saw what happened with Kraken. Kraken had a whole bunch. They've discontinued all their staking. Binance still has staking on their site, but they've got all kinds of other legal problems going on with the SEC. So, it's that wild, wild west where you're still waiting for the sheriff to come into town and establish a little bit of law. Unfortunately, you have a couple really good people who are trying to do the right thing and abide by all the rules. And then you got a lot of other, charlatans that are coming in here and giving it all a bad name. So hopefully we can get rid of those guys. I'm hoping that sheriff comes into town and actually is amicable, not hostile like Gary Gensler.
Got it.
All right, John.
Well, thank you. I've enjoyed it, and best wishes and good luck for all your listeners.
Yeah, well, thank you very much. I appreciate you coming on. We'll try to get you back on here in the near future. We'll come up with another interesting topic. You've always got some fun stuff to talk about. Maybe we can talk about some Austrian economics down the road. We haven't done that in quite some time. So thank you very much for your participation today, your thoughts on the coming shitcoin purge, and hope you and your family do well, and I will talk to you soon, my friend.
Yep. God bless you. Good luck.
Dude, take care. All right, guys, that was the John O'Donnell, Ambassador of Opportunity, giving us a little insights into shitcoins, what they mean, what they are, how they're going to work. Interesting, John thinking he's a Bitcoin maxi. I don't think he's a maxi. He is close, but I think he is actually somebody who sees the value of a choice of a system, a value of decentralized marketplaces, and hopefully that will move on to bigger and better things for us down the road. Real quick, let me just go into your economic calendar for tomorrow because I'm way past my time due and I've got something I got to jump onto at 3 o'clock. So here's what we've got cooking for mañana. You have FOMC meeting minutes, which of course will kind of peel back the curtain a little bit and let you know what they were thinking at that last meeting and where things are potentially going to be going forward. I will do a poll for you tomorrow on those rates. Thank you for the question there. Someone was saying, let's do a poll on rates. I'll do that tomorrow. For the U.S., you have building permits, housing starts, industrial production, capacity utilization rate. Those are your big pieces. Tonight, in just a few hours, you have New Zealand coming out with a rate announcement. Now they're expected to stay at 5.5%, which would represent the second pause in a row for them. Right now, if we look at what our rates are doing, let me bring this up for you over here. We'll bring up our countdown to the Fed Funds Futures meeting just to see where we're at today. Right now, I believe it's right around 85% chance. Oh, it jumped to 90 today. Here you go. 90% chance you're going to see a rate pause at the next meeting. 10% chance you're going to see a rate hike. It was 88% yesterday, so a slight increase there in the probability of a pause at the next meeting. Now, when we look at the earnings calendar, I don't think I have that one all set up here, so I'll go back over here and I'll bring up your earnings calendar. You did have some earnings today. Little Home Depot reporting earnings today. There is your calendar. They came out and they beat earnings ever so slightly, but you notice that there were a few here that beat today that showed decline. So you had Cardinal Health was positive on their earnings announcement, and they were down 2.6%. Agilent as well beat earnings, and they missed. You had a couple others on that list as well, but that's not the big stuff. Let's go to your Wednesday calendar. Big names for tomorrow. You have Cisco, Target, JD.com, Tencent, TJ Maxx, The Children's Place. No idea what that is. Probably not a store I'm going to frequent. Tupperware brands. I can't believe people are trying to get me to buy Tupperware. Where was that guy? Michael? He was like, you got to buy Tupperware. Buy Tupperware. Like, what? Why would I buy Tupperware? Yeah, it shot up over the past couple weeks. It's Tupperware. This is a meme stock at this point. All right, this is a junk company. Leave it alone. Move on. Something else. Here's your HD for the day. Huge swings, big volatility for Home Depot on the session. And all in all, I think that I saw that Skilled Stocksman was very happy with the way these markets progressed today. It was an ugly one. It was down 1.15%. I've got that demand zone drawn out on our S&P, which is between 44.11 and 44.45. And there we come, drifting down right into it. Oh boy. The dollar, I actually was expecting this dollar to have a bigger pullback, and it started off showing weakness today and then just kind of ripped right back up. So that supply zone overhead on the dollar index is still there, but the more we chip away at it, the more likely the dollar is going to continue to break through that, and that means more downside for the equity markets. Should we get a sell-off in the dollar, of course, that would mean rally, which is what I was expecting today. Nope, didn't get it. Actually got the opposite of a rally today. Your 10-year bond was up significantly with regards to yield as well. Again, I'm still targeting this level up here at 4.335. I guess Merlin will never host a Tupperware party. No, I wouldn't host a Tupperware party. What I would do, if I hosted a Tupperware party, funny you should say that. If you told me host a Tupperware party, I'd invite all to my house, and I'd say, how much are you all willing to spend on Tupperware? And you'd be like, oh, I'll spend $100. I'll say, okay, give me $10 profit, and I'll buy you $50 worth of plastic containers at, I don't know, grocery outlet, Big Lots, Target, Walmart, someplace where I can buy big container. I'll go to Costco and buy it for you. I will have saved you $40 on what you said you were going to buy. I make $10 in the process, yet you only really spent $50. Yeah, that's how I would do those Tupperware parties. I know, I'm a clown. Anyway. Serve the rye. What else do we have? I think that's pretty much it. I'm going to get out of here before this turns into a 1-hour show because I know that Big Eb's back there laughing, counting down the seconds. So that's going to do it for me for today, guys. I will have Jerry Baldwin on the program on Thursday. Tomorrow, I'm going to go to a bunch of listener questions. Hope you enjoyed today's show with John O'Donnell, the Ambassador of Opportunity. If you have any questions, comments, feedback, send them on in at TraderMerlin@gmail.com. That's your email right there on the screen. Or you can send them on in under any YouTube video, and I'll get those all answered on tomorrow's show. Thank you guys so much. Take care. I'm under 1 hour. There you go. See ya. Bye.